With interest rates higher than they've been since the year 2000, it makes sense that you should wait to buy a home until rates come back down again. That's the prevailing story dominating headlines today, and it's creating a lot of unnecessary fear for would-be homebuyers. But what if I could convince you that buying a house at a higher interest rate and a lower price point could actually benefit you more than waiting for interest rates to fall? The decision to purchase a home requires careful consideration of several financial factors. With that in mind, I want to go through and analyze why, in the state of Colorado specifically, where the average home price is $700,000, it might be more beneficial to opt for a home at a lower price with a higher interest rate. Hi, my name's Nicole Rueth with the Rueth team, one of the top 20 lenders in the country, and I'm so glad that you're here. If you find this video helpful, please give it a like or leave a comment down below with any follow-up questions. This is what I do day in and day out, and I love it. So please don't hesitate to start a conversation. I'd love to chat with you more. Purchasing a lower priced home can lead to a lower total interest payment over the life of the loan, even if the interest rate is slightly higher today. And I want to double click on this because the historic average interest rate is 7%, which is right where rates are sitting today. Yes, it is not the 2s or the 3s that we saw in 2020 and 2021, but that was far from normal. So let's take a look at this example. Consider a house priced at $700,000, the average here in Colorado, with a 6% interest rate versus maybe a $600,000 home at a 7% interest rate, both on a 30-year term. The total interest paid for the $700,000 home at 6% is about $799,000, whereas for the $600,000 home at 7%, it's about $719,000. The less expensive home still results in a smaller total interest payment over 30 years, despite the higher rate. If you're looking to own your home long-term, which you should because real estate is a long-term wealth game, it makes much more sense. The best part is that the interest you pay can end up being even less when you refinance, which over the course of 30 years is very likely. Lower priced homes can lead to a more manageable monthly payment, even if the interest rate is a percentage point higher now versus what it could be 1 year down the road. Given a potential homeowner's annual income of $85,000, the 28 to 36% debt to income ratio rule would suggest a maximum monthly housing payment of 28% being $1,983 a month. However, in Colorado, just under $2,000 a month may not buy you much, which means you will likely have to go over the 28% rule. This is where your lender can be a key player in your home buying journey. We can help you qualify for the maximum amount you can purchase, which in today's case will likely be more like 40 to 45% rather than 28%. From here, we can help you find a comfortable monthly payment that does not break the bank, but gets you into the home that you're happiest in. For a $700,000 home with a 6% interest rate, the monthly mortgage payment, principal and interest, would be approximately $4,200. On the other hand, for the $600,000 home with the 7% interest rate, the monthly payment is about $39.95. Despite the higher interest rate for the less expensive home, the monthly payment is still more affordable. So let's just stop there for a moment. Do you realize the numbers we just went over? I mean, even with higher rates, your monthly amount could be lower. So often, many home buyers get shell-shocked by the rates that they fail to notice the monthly payment. which is what you should be focused on. One that works for you and your budget. And you can bet that once interest rates do drop, home prices will climb their way back up due to an increase in demand. That's why getting in today, while demand is low, home prices are steady, meaning we aren't really seeing them be bid up as much, and interest rates are around 7%, could actually be your winning strategy. Colorado's housing market is known for its competitive nature and potential for home appreciation. By purchasing a less expensive home, there's not only the immediate advantage of a lower monthly payment and less interest over time, but the homeowner might also benefit from the same rate of appreciation on their home's value, thus seeing a significant return on investment when the time comes to sell. So all in all, don't be scared by the interest rates today. The question you should be asking isn't, what is the lowest rate I can get? It's, how can I get the best monthly payment for the biggest long-term opportunity? If you have any questions or would like to find out what a comfortable monthly payment could buy you in today's market, give the Rueth team a call. We'd be more than happy to go to work for you.